Are you looking for a simple, beginner-friendly trading strategy you can rely on, the one that can be responsible for huge gains on your account in 2023? Well, I have something very special for you today. The trading strategy we're going to present to you in this video works extremely well on crypto, stocks, and Forex. It shows excellent results on lower time frames, making it suitable for day traders and scalpers. Before we do start, please take 1 second of your time to like this video. By doing so, you greatly contribute to our diligent work. So without wasting any time, let's proceed to building the setup step by step. As an example, we're going to be using the price of Bitcoin versus the US dollar on the 1 minute time frame. The setup I am showing you today includes 3 free TradingView indicators. We will explain in detail how they work and what settings to use as we install them on our chart. So in order to add the first indicator, move up towards our indicator search tab, and you are going to be looking for 10 in 1 different moving averages, which is this one here by Heatman Shoe. The following step is to access the indicator settings, and in the input section we're going to be enabling our second moving average and change this type from simple MA to exponential moving average. We're also going to be changing our length here from 1 to 50. Then head over to our style section and change the colors of our moving averages. After you've finished with the settings, the chart should look like this. The exponential moving averages you see on the chart will determine the long-term trend direction. If the price breaks above the EMAs and the 50 EMA crosses above our 200 EMA to the upside, the uptrend is then confirmed. During the uptrend, only long positions can be taken. When the price breaks below the moving averages and the 50 EMA crosses below our 200 EMA to the downside, the downtrend is then confirmed. Make sure that you are only taking short positions during this time. Okay, since we've learned how to identify trends in the market, let's apply our next indicator. So come up here and click on your indicators tab, and we are going to be searching for pivot point super trend, which is this one here by Lonesome the Blue. Keep the settings of this tool on default. We will use the pivot point super trend as the first confirmation indicator. Based on these buy and sell signals, we will be placing orders if the rest of our conditions are met. For example, as we previously mentioned, a sell signal is only valid when there is a downtrend, and the exact opposite is true for long entries. This way, the signals given by our super trend dramatically increase in quality. However, such strategy would not be complete without the third piece, which is a volume indicator. There are dozens of volume indicators out there, but the one that is highly recommended for this strategy will be our heat map volume indicator, which is this one here by XDE Cow. Please pay very close attention to the adjustments of our settings. So make sure you come across to your style section here, and we are going to be changing our extra high volume threshold to 3, our high volume threshold to 1.5, and our medium volume threshold to 0.2. This indicator colors the volume bars and our candles according to the volume traded. Extra high is colored in red, and then our high and medium volumes are colored in orange and yellow. And then our low volume bars have a light blue and blue color. Volume is important as it shows how active market participants are during a specific time period. In my opinion, the most advantageous time to take a trade is when the volume is medium or high. As you can see, when the levels of volume are low in the market, the price usually does move sideways. Participants in the market aren't sure whether the price will rise or fall. If you decide to enter the market at this time, there is a high chance that your position will result in a loss. The same is true when the volume in the market is extra high. Spikes in volume usually create imbalances, which result in chaotic price action. You should definitely avoid trading during this time as well. Based on the information we have learned so far, let's now understand the exact rules for taking long and short trades. So for a buy signal, make sure the following is met. First, the price action is closed above both of our moving averages, Second, the 50 EMA is positioned above our 200 EMA. Third, the pivot point super trend gives you a new buy signal. And fourth, at the time the signal is issued, the volume bar should be colored in yellow or orange. If all of these conditions are met, we can safely enter a long position on the close of our trigger candlestick. The stop loss will be set slightly below our 50 EMA, which is our yellow line. For the take profit target, we are going to be looking for 2 times the risk, with the adjustment of the stop loss to break even as soon as the market reaches a 1-to-1 risk to reward ratio. Here is another example of a buy signal. As you can see, all of the conditions were met, and we managed to move towards our take profit target. Do the exact opposite for short trades. First, wait for the super trend to issue a new sell signal. Second, at the time the label is printed, the price must be closed below our 50 and 200 EMA. Third, the 50 EMA must be positioned below our 200 EMA, which we can see we did just get the cross for it. And lastly, our volume bar should be colored in either yellow or orange. When the requirements for a short entry are met, we can place a sell order on the close of our trigger candlestick. The stop loss will be set just above our 50 EMA, and do the same thing for the take profit as you would for long trades. You can even exit a trade as soon as the price touches the 50 EMA. Just keep in mind that you can only exit a position that is running in profit. With this money management in place, some trades can give you a massive risk to reward ratio of 23-to-1, which is truly unbelievable. We tested this strategy on the price of Bitcoin on the 1-minute time frame. For the past 6 days, the strategy generated 17 wins and only 2 losses. This is a win ratio of almost 90%. If you had have risked 5% of your account each trade with a risk to reward ratio of 1-to-2, you would have made over 100% in profit in under a week. This is also after fees. You can use this strategy on different markets as well, and it is effective for the 1 minute, the 5 minute, and the 15-minute time frame. Make sure to backtest and forward test it on a demo account before using it on the live market. Okay traders, I hope you enjoyed this amazing strategy. If you have any questions, please ask them down in the comment section below. If you enjoyed, please leave a like, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.